Hello Jays, and welcome to my channel. If you're new here, make sure you guys leave a like, comment, and subscribe to this channel. Today we are going to be talking about the difference between fundamental and technical analysis. Hope you guys enjoy the video, and I will see you in the next one.
Ever wondered what the difference between fundamental and technical analysis is? Well, you're not alone. Welcome to the fascinating world of financial analysis, an intricate labyrinth where traders and investors navigate their way to make informed decisions about buying or selling securities. In this realm, two techniques reign supreme: fundamental and technical analysis. They are the compass and map, the tools of the trade that guide individuals towards financial success. Some may prefer one over the other, while others use a combination of both. These methodologies, each unique in its approach, aim to predict future market trends, helping investors and traders to maximize their returns. Indeed, understanding these techniques is akin to learning a new language, the language of the financial market, filled with charts, ratios, and trends. So, buckle up, as we embark on this exciting journey of financial analysis. Now let's dive deeper and start with understanding what exactly is fundamental analysis. So, what is fundamental analysis? Well, let's dive right into it. Fundamental analysis is a method used by investors to determine the intrinsic value of a security. It involves evaluating a slew of economic, financial, and other qualitative and quantitative factors. It's like being a detective hunting for clues and piecing them together to form a complete picture of a company's financial health. Now, what are these clues we're talking about? They're key components such as earnings, expenses, assets, and liabilities. Earnings refer to the company's profits, which are a clear indicator of its financial success. Expenses, on the other hand, are the costs incurred by the company to generate these earnings. Next, we have assets and liabilities. Assets are everything the company owns that has value, like property, machinery, or even intellectual property. Liabilities, conversely, are the company's debts or obligations. In fundamental analysis, these components are meticulously examined. Investors look at a company's financial statements, industry position, market competition, and even the overall health of the economy. They consider every tiny detail, from the CEO's leadership style to the latest industry trends. The goal? To determine whether a security is overvalued or undervalued. If the intrinsic value is more than the current market price, the security could be a good buy. If it's less, well, they might think twice before investing. That's fundamental analysis in a nutshell, but what about its counterpart, technical analysis? Now, moving on to technical analysis. This is the other side of the coin in the realm of financial analysis. Where fundamental analysis looks at the intrinsic value of an asset, technical analysis is all about forecasting the future price movements based on past market data. Sounds a bit like time travel, doesn't it? Well, it's not quite as sci-fi, but it's definitely a fascinating field. The key players in the technical analysis game are primarily price and volume. These two elements form the basis of all the charts, patterns, and trends that technical analysts use to predict future market movements. Imagine you're looking at a chart. It's not just a collection of lines and numbers, it's a story. It's a history of how an asset has performed, and it's filled with patterns and trends that can give us a clue about what might happen next. Patterns are like the DNA of the market. They repeat over time and can indicate whether a price is likely to go up or down. And trends? Well, trends are like the market's mood. If it's in an uptrend, prices are generally going up. If it's in a downtrend, prices are going down. Understanding these elements and how to interpret them is the key to successful technical analysis. It's like learning a new language, the language of the markets. So, that's what technical analysis is all about. But how do these two compare? Let's find out. So now we know what fundamental and technical analysis are, but how do they stack up against each other? Let's start with the primary differences. Fundamental analysis is, at its core, an in-depth examination of a company's overall health. It focuses on factors such as a company's earnings, the state of the economy, industry conditions, and management effectiveness. It's about evaluating the intrinsic or real value of a company. This method is often used for long-term investment strategies, where the goal is to invest in companies that are fundamentally strong and undervalued in the market. On the flip side, technical analysis is like a heartbeat monitor for the stock market. It's all about studying price movements and identifying patterns within market data. It's more about price than value. Technical analysts, or chartists as they're sometimes called, believe that past trading activity and price changes can be valuable indicators of future price movements. This method is often used for short-term trading or timing market entries and exits. But here's the deal, while they're different, they're not necessarily mutually exclusive. Think of them as two different lenses to view the same landscape. Fundamental analysis answers the question, what stock should I buy? It helps you identify companies that are undervalued and have strong growth potential. Once you have a list of potential companies, technical analysis can then answer the question, when should I buy? It can help you predict the best time to enter or exit a trade based on price trends and patterns. That being said, the choice between fundamental and technical analysis often comes down to your investment goals and timeline. If you're a long-term investor looking to hold stocks for years, fundamental analysis might be your go-to. But if you're a day trader or swing trader, technical analysis may be more your speed. So, depending on your investment goals and timeline, you might use one, the other, or even both. So, let's round up what we've learned today. We've delved into the world of financial analysis and discovered two significant approaches: fundamental and technical analysis. Fundamental analysis, you'll remember, is all about evaluating a company's intrinsic value. It's a deep dive into financial statements, industry trends, and market conditions. On the other hand, technical analysis is a study of statistical trends, primarily price movements and trading volumes. It's like reading the pulse of the market. Both these methods are like two sides of the same coin, having their unique strengths and weaknesses. Depending on your investment goals and strategies, you may choose to lean more towards one than the other. Some investors may even find a mixed approach to be the best route. Remember, in the world of investing, knowledge is power. So keep learning, keep analyzing, and most importantly, keep investing.